All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall, your host. And I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions, here's a quick disclosure of Derrick's current positions as of our recording here. Again, he is the head trader at T3 Trading Group. And we just have to disclose what he's currently trading. So here you can see what that is. The title of our stream today, Derrick, is It's a Busy Week. And it is a busy week for sure. We're getting earnings season starting, CPI, PPI, other economic data points coming out after what was a very quiet week for the market last week. But starting off here on Monday, major indices are the Dow's down a little bit. The S&P is basically flat. The NASDAQ up a little bit. Kind of focused on, the headline is they're focused on tariffs, but there's a lot of things happening for the market and that traders are focused on, investors, etc. So when it comes to you on this Monday, how are you feeling about the market here ahead of this really busy week?
Sure. So the market structure for this week is really interesting. I guess starting with a quick recap of the month so far, and particularly last week. So there's been a very widely chatted about systematic bid underneath this market for the month of July, particularly the first half of July, as the very, very heavy realized volatility from last April rolls out of the 3-month look back, which is something that impacts systematic vol control funds. So as that rolls off, it forces those vol control systematic funds to re-leverage back into the market. So last week in particular should have been a very, very strong bid from the systematics. And that bid really should continue for another month if the market stays like it's been, flat, light realized volatility, upside grind. We should continue to see like a couple $2 billion, I think, of buying on average per day over the course of the next month. But last week was so interesting because there were a couple sessions last week where the amount of SPX that vol control was supposed to buy on a couple of days was like record breaking. And that was because we had that day in April as an example where I think that the S&P was up like 9.5% on the tariff pause day. So we rolled that off on the realized look back, and that created a day where there was supposed to be $40 billion worth of buying for vol control funds last month. And one day last week, $40 billion worth of buying just in one day. I think that was supposed to be Thursday of last week. I'm just going off of memory. And we did make an all-time high on Thursday, but we didn't get so much follow through as what you would expect off of such a record-breaking number. And you got to ask yourself why, and does that have any meaning to this market as we move forward? So why? Let's start with the why. The why is probably because it was so widely telegraphed. One, that it was front run, and the number was so big that I think that it was even front run by the systematic funds themselves, because they knew that there was no way they could actually buy that much stock in one day. They probably started buying it in advance of that day. And again, it's the most widely telegraphed systematic bid, I think, ever, because it's the biggest one ever. So everyone's been talking about it. And I've started to really follow these market dynamic influences more and more over the course of the last 5 years. So I've been looking at this stuff for a while, but it seemed like all of a sudden everybody was talking about it as we were ending June and going into July, just because, again, it's supposed to be completely record breaking. And yet we kind of had like a flattish week last week. We pulled back a little bit on Monday. We rested on Tuesday. We continued on Wednesday and Thursday. And then Friday, we're a little bit weak. We were helped a little bit by some of these tariff headlines, which are becoming increasingly negative as we're seeing that, the numbers begin to pick up again. I guess on the one hand, you could make the argument that they are increasingly negative because we're seeing the numbers ramp up. But on the other hand, you could argue that it's not actually increasingly negative because all that really happened was an extension of the pause. Really, we were supposed to see all of the tariff numbers that Trump had on his big, beautiful board hit on July 9th, but he fast forwarded it, or paused it further, I guess I should say, to August 1st. So we did get some negative headlines out that I think helped hold the market down a little bit, but it's interesting to see that we just didn't continue as much as I would have expected otherwise. And again, what does that mean? one of my favorite signals I like to pay attention to in trading is in regards to news. When really good news comes out for a stock or for the market and the market doesn't move higher, sometimes it's a signal for the other direction. And the opposite is true as well. Sometimes when you get a signal, sometimes when you get like bad news and the market can't go down, it becomes a signal for the other direction. I didn't lose you, did I?
No, I'm still here. I just have myself muted in case I have a screaming baby in the background.
Connection to my trading software somehow, so I just wanted to.
Oh, okay. No, you're still here. Yeah.
Lose you entirely. So I'm trying to log back into that. Oh, I guess it's not just me. It looks like it's a Lightspeed problem. So again, it was just really impressive that we were not able to continue last week. It's not a news-based event. It's a little bit more systematic. So I don't know if it necessarily applies in the same way, but I'm curious to see if the fact that we couldn't really continue last week in the way that we should have is a signal that we're kind of done moving up, at least at the rate that we were. Not necessarily a signal for a sell down, but then you have this week. And for this week, we have some really important stuff going on. So for this week, we have some important economic numbers with the beginning of earnings season. We have expiration, we have OPEX. Expiration and OPEX are really important just because they mark a market dynamic related event that can sometimes loosen the market up a little bit and create for bigger movements. So if we can get some negative headlines as we get through OPEX this week, then I think it can set the market up to go down. But that is an if-then statement. You need negative headlines to come in at a time when the market dynamics can actually enable the market to move down in order for the market to move down, if that makes sense. So that's kind of where we're at.
All right. One of the big things happening this week is CPI and PPI. So we get CPI tomorrow, PPI on Wednesday. Of course, these numbers are in focus because everyone wants the Fed to cut rates. Some Fed officials have continued to say like a July rate cut is probably possible and probably warranted. Other Fed officials saying they're worried about inflation being sticky, specifically Fed chair saying that in his testimony to the House last month. The next Fed meeting is end of this month, right? Am I right?
Yes? At some point this month. I'm not sure the date on it.
End of this month, I think. And then this weekend, again, we saw the president and his administration, specifically Hassett, saying he does have the authority to fire the Fed chair if he did something to be fired, basically kind of coming out with that rhetoric again against the Fed chair, kind of raising the will he fire him alarm for the market. So with this data coming up this week, what do you think? Obviously, if the CPI comes in hot, not good for the market. If CPI comes in light, that's what the market wants to see, and hopefully what the Fed wants to see as well. How important are these numbers tomorrow and Wednesday?
Yeah, the inflation number is important. We're expecting the expectation on the CPI number. I forget what it is, but it's expected to be an increase year over year in inflation, which is going to be the first one that we've seen in a while.
It's supposed to go to 2.7% annually from 2.4%.
Right. So we're seeing a little bit of an uptick there. The question still is how like timing on tariff impacts on the economy, timing on tariff impacts on any economic slowdown and on an increase in prices. And so far, we haven't really seen that. I think that the timing on that is going to be fairly spread out, because what matters most is how good of a job did companies do front running these tariffs with their inventory. That I think really is the biggest impact on the timing of when potential tariff-related inflation, potential tariff-related economic slowdown can begin to impact markets or not. It's what does the inventory look like on these companies? Originally, Walmart was one of the biggest anti-tariff advocates, and they had said that they were probably going to need to begin to raise prices, I think at the end of May or the end of June. I think at the end of May. So like a Walmart, for example, you might be beginning to see that. But then when we had Nike report their earnings somewhat recently, they said that they're probably not going to need to increase prices on their goods until the fall. So that's a very different example of tariffs being a little bit more delayed. So I think it heavily depends on how good of a job companies have done just in terms of preparing for these tariffs in advance. And it's not necessarily going to be just one all of a sudden giant increase in inflation on 1 month because all of a sudden everybody's being impacted by tariffs at the same time. It's going to be a little bit more of kind of a rolling type of thing, and that would be the same impact that it could have on the economy as well. So, we'll see. The bottom line is the economy is still holding in incredibly well. The employment situation in the United States is still excellent. So, if the Fed is trying to play it safe, I understand why they would just kind of be taking their time with things. There's no emergency to be cutting rates if the economy is doing as well as the employment numbers seem to suggest. So you can kind of just wait and see a little bit on this entire situation. So I'd be pretty surprised if we saw a Fed cut in July, but I'd be pretty surprised if we didn't see some by the end of the year. So, we'll see how the numbers play out.
Yeah, and we are going to hear from a lot of Fed officials this week as well. 4 speeches on the calendar tomorrow, 2 on Wednesday, 4 on Thursday. Some of those being those who have said the July rate cut, some of those being those who have been against it. So maybe we'll get a better picture of how the Fed is feeling about
it. Yeah, and we have to keep in mind as well that Jerome Powell is the most important person, and he's the poster boy of the Fed for sure. But it is a committee, and when you saw the Fed minutes come out, I think last week, what you saw from that committee was pretty diverse opinions. You had some people that were thinking we need to cut immediately. You had some people who are thinking that there shouldn't be any cuts at all this entire year. And what it averaged out to being was that there should be some cuts this year, but probably not for July. And it doesn't necessarily need to be dramatic. And that's a thought process that I'm on board with, unless we see a major change in the economic data. We just haven't seen that so far.
Yeah. All right. The other big story this week for the market is the start of earnings season. We have the big banks kicking things off kind of officially. Tomorrow, we're going to get JP Morgan Chase, Wells Fargo, BlackRock, Citigroup all in the morning. It's still weird to me to see a JP Morgan report on a Tuesday, not a Friday, unlike usual. I think this happened last quarter as well. So 2 quarters in a row, a weird start to earnings season. And then the rest of the week, Bank of America, Goldman Sachs, Johnson & Johnson, just the typical start of earnings season group. How are you feeling heading into Q2 earnings season? What are you focused on as a trader when it comes to setups into earnings, setups after earnings, etc.?
Yeah, so the banks are always interesting to pay attention to because they're first, but I don't see earnings reports from banks really having any more broader impact on the market or giving any sort of read through that might impact more important companies, more important sectors, namely tech. The most important stuff that's going to be out there is going to be big tech and semiconductors this earnings season, like it's been almost every earnings season. Especially just with the big run now. We've been on a huge run for AI-related names and semiconductor-related stocks. Those are going to be the most important ones. And I think we have ASML on Wednesday. So while we do have the big banks that are going to be kicking off this week, probably the most important earnings report of the week is going to be ASML, because if they have a really big movement, it's probably going to move semiconductors as a whole. So that's the biggest one that I'm looking for this week, but I'll certainly be paying attention to and potentially be trading the banks also.
When it comes to an earnings report and how the market, will or will not react to numbers, so much of it is often where the stock is headed into the report. Look at the market overall. The market overall headed into earnings season has, had a huge run up. We've gotten some consolidation over the past couple weeks where we've been a little bit quieter at the start of July. But does that put you in a more bearish or bullish stance headed into earnings season overall, seeing what the market has done in the few months leading up to this?
So the market's had a huge run, but positioning still isn't too stretched to the upside. So we'll see. There's pockets of the market that I think maybe got a little bit ahead of themselves. It's funny. You're talking about how JP Morgan is starting on a Tuesday. You're used to it starting on a Friday. These things evolve. The way companies report earnings and who's first evolves. Forever, it was always Alcoa. Alcoa was first. Alcoa typically is the official start of earnings season. Now it's not Alcoa. Now it is the big banks. But also, it kind of to some degree feels like earnings season never ends, because you get these companies that are important companies that report after the bulk of earnings season is over. Like NVIDIA is a pretty late reporter these days. AVGO is a fairly late reporter. And then Micron just reported basically at the end of June. So it's like, if you think about if you want to say that like Micron and Nike are like the end of earnings season, that was just a couple weeks ago. So it's like we get 2 or 3 weeks off, and then we're back into it. So it's been a big evolution. But the reason why I mentioned that is because with both AVGO and Micron, which are pretty important companies, and they were at the end of the cycle, semiconductors had been in such a huge run into Micron. I don't know if my screen share is still up, because I did briefly lose connection on my trading software, but I'm back up. Okay, cool. There it is. So Micron reported earnings here on June 26th, and you can see that they gapped it up and they sold it down, and that's been the absolute high from the stock ever since. The thing that you should note about Micron, if you just didn't know what the report looked like and you just looked at the chart, you would probably say like, oh, they reported a good enough of a report to gap up initially, but it couldn't have been that great because it marks the absolute peak for the stock. Let me tell you, that Micron report was phenomenal. It was phenomenal. It was excellent. But look what the stock did into the report. Look what it did in the month of June into the report. This thing, it was mind-blowing, actually. This stock could not pull back for anything in the entirety of the month of June. It was just up and to the right, up and to the right, up and to the right. Didn't even give you a single touch of the ADMA on the daily, which is my blue line here, until the day after it reported earnings. So the report was phenomenal. But the fact of the matter is, just in 3 weeks into the report, it went from $100 to $130. It had a 30% increase in 3 weeks into the report. The report was phenomenal, and then they sold it down. AVGO was actually pretty similar. AVGO was earlier in June, but this thing, look what it did in May. May, the stock was on fire. It went from $200 to $250, and then the 3 days that started June, it continued to $265. So this stock went here's another name. It went up 30-something% over the course of a month and a few days into its report. And then guess what? This report was also phenomenal. It was an excellent, excellent report. And they gapped it down and sold it down. And then it had to time digest here for a few weeks before it was able to actually break out and finally give some continuation. So when you turn over to the market, I do always like to pay attention to, broadly speaking, has the market had a big move in one direction or the other as we're coming into this earnings season, because it kind of sets the bar, right? If you have a big move higher into an earnings report, and that earnings report just comes in line, let's say, and line's not bad, it's in line. It's not bad, it's not good, it's, in line. But you'll oftentimes see a stock sell off. If the opposite happens, if you have a really weak market into an earnings report, and let's say that earnings report comes in perfectly in line, a lot of times you see the stock move up. And that's just because of expectations and kind of sentiment and positioning going into the actual report, then having its impact on how the stock trades after the fact. So, we've had a really, really big move higher, I think, overall for the indexes. And this is going to be an interesting earnings report because on the one hand, we've had such a move higher, but positioning remains not too crazy. And I think that for second quarter earnings, you're just expecting like 4% year over year growth, which is much lower than it typically is. So it seems like in some regards, the bar is actually low coming into this earnings season, even though price is accelerated higher. So it makes it kind of unique in that regards. So I got a feeling we're going to see some exciting action and some big surprises in both directions, and that it'll just be a great environment to be a trader.
All right, it's the first day of the third week, really, of trading in July, because we had that like one Monday that was still June, and then the rest of the week was July. So when you look at the market here, what are some, I want your ideas. So what are some ideas, names you like, ahead of this busy week for the market after we've had 2 weeks of action in the market in July?
Sure. So there's a few interesting things that are going on. One is when you look at these technicals here, they look beautiful and healthy and strong. But I mentioned last week that it seemed like we should have went higher and we didn't. Maybe that can be a signal for the other direction. And look, the other direction doesn't mean we go into bear market necessarily. The market could easily pull back to 610 to 615 and still be very technically bullish. So at this point, with the run that the market has had, as we're getting into OPEX this week, I am less bullish on the market, but I don't want to really act on that without the technicals confirming it. And the technicals are not confirming it. We had an opportunity this morning to lose the ADMA on the daily for the SPYs and the Qs. We actually had a very interestingly weak, first 10 minutes of the day today, first 15 minutes of the day. There was a big sell bar on the third 5-minute bar of the day for the NASDAQ and the SPYs, but then it was immediately retraced, and now we're making new highs even as we're having this conversation. So it seems like technically this market is fully intact, and that does not mean to jump into the short side. But I am mentally prepared for this market to pull back because we're approaching a period of time of seasonal weakness. And I think that we should, at some point relatively soon, begin to see the beginnings of the tariff impact in the economic numbers. So in my head, I'm just watching for positioning to get overcooked to the upside. It's not there yet. But if it happens, you start to have a lot more risk to the downside. And then if you have risk to the downside and you can get a catalyst that hits, this market, which has been in a feedback cycle of buying, could very quickly lead to a feedback cycle of selling. We're also past the point now where the VIX has made its seasonal low. That was last week. It's interesting that typically the seasonal low for the VIX happens before the seasonal high for the market. So I kind of like having some exposure to market downside, especially if you have longs. So like I put on a VIX call spread at the end of last week. I bought the August $25 calls, and I sold the August $35 calls for like 55 cents is what I had to pay for them. I just think that that's a good bet to have on right now. It could pay in like a perfect scenario. It could pay out like 18x on that risk. So I like the idea of having some kind of VIX upside optionality or market downside optionality, but I don't love the idea of really pressing the downside in the indexes until we kind of see the whites of its eyes, which means that you need to actually break the technicals. You need the catalyst to occur. And I've been saying this for well over a month to traders who want to be bearish. I know a lot of people right now, myself included, honestly, who want to be bearish. You don't need to capture the top. You don't need to be the top to the exact penny. Let the market technical show you that that sell-off is coming in, and then press it. And the flip side is you could argue right now we're bull flagging. And if we're bull flagging, don't be afraid to buy that breakout. Even if the market might eventually someday collapse, make some money on the longs in the short term if it breaks out. So kind of where my head's at is still the possibility of shorter time frame action to the upside at the index level, and bigger picture action possibility becoming to the downside, especially as we get into the second half of July, but particularly more like August and September. And I'm trying to position myself potentially for both at the same time, which is a little bit difficult to do. But that includes, momentum day trades to the long side while being prepared and thinking a little bit bigger picture to the short side. So yeah, that's kind of where I'm at. Called out a semiconductor short this morning to the team. It worked really well, but now it's already snapped all the way back. So like SMH to the short side, Micron, which had a downside kind of catalyst from an analyst over at Edgewater this morning on a break of 120 on the short side was something that we were looking at. NVIDIA below, if it was able to hold below 165, liked it as a short, but it's now ticking back above 165 as we're having that conversation. So those trades actually work great off the open, but this market with its never-ending bid is just starting to negate them at this point. So that's where we're at.
All right, cool. Real quickly, Derrick, Joe last week in our live stream was asking some questions about T3 Trading Group and was going to reach out to you. He says he sent you an email last week. Thanks for your insight in today's live. So if you could look out for that.
Awesome.
And talk with Joe. Again, everyone, Derrick is a real trader and the head trader at T3 Trading Group. So I do want to let him get back to that. But if you'd like to learn more about the benefits of prop trading, working with Derrick himself and the team there, you go to t3live.com/DOLive to get his free ebook. Again, that's about the benefits of prop trading, how you can become a prop trader, work with Derrick himself. And he's got a great team there in the pro desk and with T3 Trading Group as well. So again, Derrick, have a great rest of your Monday. Have a good week. It is a busy one. So enjoy this quiet day before everything ramps up tomorrow morning. Hopefully you get some good, exciting trades happening. And I'll talk to you next week.
Thanks, Rita. Appreciate it. Talk to you soon.
All right. Thanks.